Thank you very much, Josh, and welcome to our first panel of our measurement track here at Emerge Insights. My name's Helen Robb, and on this panel, we're going to be discussing how to unlock insights from customer data. We have access to more information about our consumers than we ever have before. So how do we use that to support their financial health journeys? I'm joined by three wonderful guests who will be helping us to pass through how to use customer data to drive insights and build impact for financial health while protecting customer privacy and safety. A reminder that you can be part of this discussion by asking questions or adding comments in the comment box to the right of this video. We look forward to hearing from you. Today, I'm joined by Fiona Greig, the director of the JPMorgan Chase Institute, a think tank dedicated to delivering data-rich analyses and expert insights for public good. Stephanie Woods, the Senior Manager in Marketing Data and Analytics at BECU, a nonprofit credit union in Washington State and one of our financial health leaders. BECU have paved the way in the use of transactional and customer data for financial health measurement here in the US. And then last but not least, we're joined by Ben White, who works in policy and research development at Plaid, a data aggregator with the mission to democratize financial services through technology. Good morning, everyone. Your three organizations each play a really important role in utilizing customer data for financial health. I'd love if you could each introduce the type of work that you do and how you use customer data to further your mission and your roles in improving financial health for all. I'd love to start with you, Fiona.
Sure, and thank you for having me. So the JPMorgan Chase Institute, we use the firm's administrative data to do economic research for the public good. And my team accesses a range of consumer products. So that's primarily checking accounts, but also credit cards, mortgages, and other loan products. And I think the intent here is not to say something about Chase customers, but rather to use the millions of Chase customers to create a view of what's going out there on the economy. And that's tricky insofar as, of course, we exclude people like the unbanked by construction. But with these very large sample sizes, we are able to mirror the income distribution that's out there, and reweight our data as necessary to create that view. And so, many of the topics we've covered are to understand, with this high frequency view of income, spending, balance sheets, or liquid assets anyway, just how volatile income is, how that translates into spending, how important cash buffers are in financial resilience for families. So that's kind of the top line.
Great, thank you. Stephanie, I'd love to hear how that translates at BECU and how you use consumer data.
Absolutely. BECU, it is in the organization's purpose statement to directly improve the financial well-being of our members and their communities. So we very much wish to directly at the micro level understand and track and improve all of our product services and tools that we offer, and understand which ones can have the greatest impact on our membership. Like most organizations, we don't have endless resources. And so we want to be able to have the greatest impact with what we have, and also to constantly optimize it and improve and make sure that they're doing having the impact as intended. So definitely research and development purposes are the main use, but there's others as well. This year has been an unprecedented year. And so also being able to track membership and understand if and when the financial cliffs may be hitting. If, for instance, in March and April, there was just a huge backlog of individuals who were furloughed, laid off all at the same time, and all needed assistance very quickly. And so we would like to be able to understand, anticipate, and proactively help those members so we can get them back on track as quickly as possible.
That's great. And Ben, could you talk a bit about how Plaid uses or enables others to use customer data for improving financial health?
Of course. So for those who aren't aware, Plaid is a data aggregator that serves as an infrastructure layer for the fintech ecosystem. And what that means is that we enable consumers to connect their bank accounts as well as investments accounts and liabilities accounts, to financial technology applications that can provide them products and services to help them improve their financial lives. So while we ourselves are not a financial services provider, we do provide the connectivity that enables our 3,000 customers on the fintech side and the 10,000 financial institutions that we connect with to leverage their data, both for the purposes of building products and services to help their customers, but increasingly we're also seeing demand to use that data to provide a real-time picture of consumers' financial lives, not just at the individual level, but at higher levels in the ecosystem as well. And I know we'll spend some time in this conversation talking about what that means across different parts of our ecosystem, and I'm very excited to get into those details.
That's great. Something that excites me about bringing the three of you together is that you have very different purposes for how you want to use data, and something that comes through this year is around how rapidly insights can be turned into action as a result of using customer data at a moment of crisis. So I would love for any of you, but we'll start with Stephanie, to talk a little more about what you mentioned there, how you've been able to use customer data to really focus response during this pandemic.
Absolutely. Two main ways, of course. We very much, as closely as possible, internally have tried to replicate Financial Health Network's survey-based scoring model. And so we use that segmentation to understand, track the coping, the healthy, and the vulnerable. But we also have created a separate segmentation that's much more event-based, specific to the details of this year. So for instance, we have a COVID-19 impact segmentation. And so that tracks at the member level, three basic tiers. The top tier are members who are we know that they are having difficulties because they're requesting assistance. They are requesting loan forbearances. They are requesting 0% interest loans, any number of avenues of help. The second tier of members that we're tracking are those who we can see are losing income. Well, we can see that they are receiving unemployment benefits that they did not previously were receiving, that they're either stopped receiving direct deposits or receiving a lower amount in direct deposit, or also just general income loss. And then the third tier are those members who are changing behaviors, members who were previously not delinquent, but now they are becoming delinquent, or members who are experiencing a rise in insufficient fund fees and late charges and things like that. And so by cross-referencing the two, we can track the financial health of those event-based segments and see, are their situations getting worse? Are they improving? And then be prepared to help them. Because we definitely want to help those who are the most in need in time of crisis first. Because if we have long lines that build up, it may be those who are healthy that make it to the front of the line. So we want to make sure that we're helping those and prevent them from going into collections and other things as quickly as possible. So using the financial health score with other custom segmentations this year has really been beneficial.
That's great. And I think the other way that we've seen some insights around kind of what's going on beyond the customer level has been through the work that you've done, Fiona, at JPMorgan Chase Institute, looking at the aggregate, how the economy is faring and how customers are faring throughout the pandemic. I wonder if you could share some of the insights that you've gained from customer data there.
Yeah, I mean, it's for somebody who looks at data, I think, every single chart I look at, it looks like a data anomaly. The data spikes and the drops are just so large relative to history that you have to first ask, this can't be right. And yet it is right. So a couple of the things that we've seen, obviously an enormous drop in spending right in April when the national emergency was called. And it was at the tune of sort of 30–40% drops in spend that cannot be attributable to the job losses that were happening at that time. So you really know that this has much more to do with the pandemic than with the initial kind of economic fallout. Then the second thing we saw was both a huge rise in both spending and savings right when the economic impact payments hit. And those many of them hit accounts on April 15th, but trickled in afterwards. And so from there, we've seen actually spending, recover more quickly for low-income families than for high-income families, and that's because obviously a $1,200 check is a larger relative check for low-income families than is high-income families, but also larger percentage increases in balances. Again, because a $1,200 check is a higher percent increase on a low balance than a high balance. But the story from there has been interesting to continue to watch, which is that we're continuing to see high balances and spend levels sort of slowly come back to their pre-pandemic baseline, more so for low-income families than for high-income families. And I think the work that we have been doing most recently on unemployment insurance recipients has been some of our most impactful work in terms of just pure pickup, insofar as we studied people who were receiving unemployment benefits in July and August, and of course that $600 supplement ended at the end of July. And what we observed was that spending among those job recipients, those benefit recipients, dropped by 14% in August when those benefits expired, but also their savings levels also dropped. And indeed, the savings levels of jobless workers had doubled between March and July over the course of those 4 months, but people had spent down 2/3 of that additional buffer in just 1 month alone. So that kind of tells us that what's going on in July is not a terribly sustainable trend in terms of what we might see going forward if we don't see additional stimulus, or we don't see an additional improvement in the labor market. So we've been, as you can tell, I'm pretty fired up about kind of what we're seeing in the data and what it means for the macroeconomy, because these data, are our pulse on what's going on in aggregate, but also to these specific pockets of people who have been most impacted by COVID-19.
It's so fascinating. It's so fascinating, and I could dive into any one of those insights. But when we think about this at the measurement level and in terms of tools that we have to understand customers, it feels like this moment is brand new in terms of the depth of the crisis and the immediacy of the crisis that we've had. It's also the first time that we've had a crisis like this with this level of availability of information and ability to rapidly churn that information. I know, Ben, you've been doing research thinking about the impact of fintech and the ability for customers to rapidly access different types of services through mobile, use their data to access new types of services themselves. I'd love for you to talk a little about how Plaid's helped to enable some of that rapid response that we've seen in the pandemic.
Sure. Well, I think first I'll say that, the work that Fiona is doing is incredibly important in terms of its implications for how we think about, policy going forward. And I think for all of us, that's incredibly important as we think about how can we update our infrastructure, not just in terms of the financial services industry, but also going forward, and how do we support everyday Americans in their financial lives. As it pertains to some of the research that we've done, as I mentioned, we're not conducting research on our own data, but we did go out into the field and conduct a consumer survey with the Harris poll right in the middle of July. So, as folks were sort of coming to terms with this world that we're living in as the new normal, and we really wanted to understand what the impact has been on consumer behaviors and their engagement with financial technology. And what we found is that for just about 3/4 of Americans, they expect fintech to be the normal way that they engage with their finances going forward. And just to be clear, fintech, we're not excluding in any way sort of core, financial services online offerings, but I do think it's a really important consideration as we think about how to deliver products and services to consumers going forward. I think we were already seeing trends moving in the direction of greater digital adoption of financial services, and COVID-19 just really accelerated those trends in a really powerful way. So in addition to that COVID-specific research, we also conducted a broader survey just to understand, how well do consumers really engage with fintech tools? Are these tools something that they're truly comfortable with, and are they seeing benefit? And we actually have a report that we're planning to release tomorrow that shows that fintech is really having an impact in consumers' eyes on their overall financial well-being. And I think it really for us is a motivator to continue enabling consumers to through control of their financial data to be able to go out into the ecosystem and share it with the service providers that they want to be engaging with, and recognize that institutions have the capacity to leverage this data to provide them with really powerful services. So I think it really paints a picture of the ability for the availability of the data that we currently have to provide that insight both up and down sort of the chain in our ecosystem, from the individual level up to really the ecosystem level. As Fiona was mentioning, some of the trends that we're seeing really do affect not just consumers themselves, but also how the industry responds. And then all the way up to the policy levels, we're thinking about the financial services ecosystem and the impact that this shift to technology is having, and the broader policy considerations around things like stimulus going forward to support individuals and our economy.
I think that that's a great way to help us to really wrap our heads around how all these different pieces fit together to get a broad understanding of consumers using their data to help them to understand what to do next. And we had a question from the audience specifically for Stephanie, which is, does BECU use financial health metrics to proactively reach out to members and who are experiencing some of these significant declines in their financial health? And if so, how do you structure that way of connecting with folks?
Absolutely. I would say that it's a project that's in development right now in case a second wave of assistance is needed. It was not used in the first one, but it's definitely on the table. And so we're definitely tracking in order to see how needed is it before we actually launch it. And so, I'm sorry, what was the second part of that question again?
It was, if you are connecting with folks as a result of what you're seeing in their data, how? So how are you thinking of doing that if it is needed? Right
now it is limited to those with active loans, and we do not have data on how they've responded yet because we haven't actually launched it. So apologize, it's a rather short answer to that question.
That's great, and I think we're hearing all of these different ways that folks are getting benefit from their data being used for these measurements. I'd love to talk a little about some of the risks of using consumer data for measurement, for drawing broader conclusions. And I know, Fiona, this is something that you're passionate about in your work at JPMC Chase Institute.
Yeah. Well, first of all, in terms of the conclusions one draws, I alluded to the fact that that we don't see the unbanked, right? There are limitations in terms of how representative these samples might be. And I think, we're always quite careful to benchmark our samples against, national statistics. And so that just goes to show how complementary these data sets, are, and, the caveats that are required with which, to interpret what we're seeing, and the blind spots that we might still have, given that we are using, administrative data portfolio to inform what's going on out there. I think there's another important risk, which is obviously, customer privacy. And this is something that we have taken very seriously from the beginning, in that the premise of the JPMorgan Chase Institute was that everything we were going to do and that we do is public, and that we release publicly. And so in order for that to be possible, from the get-go, all of our data had to be stripped of all of their identifiers prior to the Institute team receiving these data. And, so there's the de-identification process. There's also the risk of re-identification, right? Because by the time I know, this person's age and their zip code and their, income level and their age, and all that kind of stuff, you might be able to start to re-identify people. So we have pretty strict controls around that, to the point that, and then the third thing I would say is that everything we do is aggregated, right? So obviously we never report anything that is, a single person, even to the point of a median, right? So a median is actually usually a single observation. And we always have to go back through all of our code to make sure that anytime we're calculating a median, we're actually taking, an average of the most median observations. So this it is part of our DNA to be careful about these things, from the point of, data delivery all the way to data publishing. And I guess, I am passionate about this topic because I am wildly enthusiastic about all organizations seeing their data as hugely valuable, not just to themselves, but potentially to the world. And I think it's really important that we always start with the privacy, because it sort of only takes one actor to do this the wrong way for it to sort of spoil it for the rest of us. So I think of this as a common good, that, this privacy question is a common good, and it's easily threatened, right, when we aren't all stewards of this common good.
Absolutely. And I think one piece that is really interesting from what you shared is around some of the limitations of what you can do, and kind of understanding those limitations, not trying to push the data so far that you make it meaningless, but trying to understand how it connects with other data sources, perhaps in the case for BECU, connecting with surveys or connecting with national statistics. We had a question from the audience about how do you actually do some of the work that you do, Fiona? How do you track some of the volatility in accounts and see the volatility in income and expenses by proxy? And how do you kind of recognize some of those patterns? I wonder if you could talk to the type of statistical methods that your team use, just at a high level, to give the audience a flavor of the type of work that's going on.
Yeah. Well, it's really tricky. And I would say that because when you have access to high frequency data, the first thing you notice is that it is very volatile. And that's because every single incomes trend or spending trend or any way in which we transact has its own inherent heartbeats, right? So for example, we spend 30% more on Fridays and Saturdays in normal times. When we're not on lockdown, we spend 30% more on Fridays and Saturdays than any other day of the week. And so when you look at a spending trend, it's going to go like this, like that, and so you can't call that volatility. That's not very interesting to call that volatility. And so a lot of what we try and do is try and sort of figure out the pulse, right? What is the heartbeat? And then get rid of that heartbeat. And then what's remaining is volatility, right? And that's always hard because God didn't create our calendar in very logical ways, right? We have things like February 29th and 5 Friday months where we pay people, on every other Friday. And then there are certain months of the year where you have 3 Fridays or 5 Fridays instead of 4. So it is actually, I can't even tell you the number of times I pull out my calendar and start staring at the cadence of the days in a given month this year versus last year and all the rest of it. So it's tricky, but I think the lessons of this work that we have gleaned are that incomes are really volatile, and spending is also volatile, but actually, and they're kind of comparable in terms of how volatile they are, to the tune of 30% swings on a month-to-month basis in income, and that's like adding or subtracting a mortgage payment or a housing payment, right? We think of housing as being no more than sort of 30% of your budget. So the fact that incomes can go up and down to the tune of 30%, that's actually having an extra mortgage payment or not having one, right? So we have learned that it is really volatile, and and I think one of the things we spend a lot of time on is literally just knowledge translation, right? So volatility is best summarized in statistics like variance and standard deviations and coefficients of variation and things like that, which don't translate to very well to a lay audience. And so we do those, but we also try to come up with numbers and ways of thinking about it that are salient for, the end user being, maybe somebody in the press who's trying to translate this for, a policymaker on the Hill, or an end user who is actually just, somebody trying to sort out their own budget. And so whether it's through data visualization or through, additional concepts that are just more easily understandable. We try to attend to the ends spectrums of our audiences, be they, academics or, Main Street.
That's great. And I think that gets to a really important part of all of this work, which is around not just how do we use this information to gain insights, but how do we make those insights have impact? I'm going to ask Stephanie, I know we talked briefly about in the limitations of consumer data, there are some ways to fill in some of those gaps with surveys or with other ways to gain insights about your customers. Could you speak about what limitations you see in customer data and how you try to pull different sources together?
Absolutely. I think every financial institution tends to specialize in certain products, and so products and services. And so for us, when we measure, we know for many members, we're not capturing their full financial picture, especially when we're focusing on first-party data. We may have a lot of accounts in transactional activity and checking account, but we may not have their mortgage. Their mortgage may not be with us, or their long-term investments may be somewhere else. So we mostly use probability modeling, sort of say we estimate that this person is healthy based on the data that we do have. And there can definitely be limitations in that. So for instance, one limitation is just exactly as Fiona said, we saw a massive increase in deposit balances over the course of the year. Very strange juxtaposition of very high unemployment and very high financial health. Like our financial health score increased a median of 5 points so far this year. And traditionally, year to year, it's only increased by a single point. And it's coming back down again, but it's actually been stabilizing. But then, the question does arise, is it perhaps people who are drawing down from their retirement too early in order to subsidize unemployment at this moment? Are some of those deposit balances coming from external accounts that are not signs of improving in health and signs of declining in health, doing negative behaviors? And so it takes a lot more investigation to look into those types of details. And when reporting, I never assume that, I always warn that we do not have the full financial picture. These are the trends that we're seeing, and I try, not to go to reading too much, accompany it with national trends, work from Fiona, and also surveys to sort of help balance that. So we did launch a special financial health survey this year that covered the core financial health questions, but also accompanied with specific COVID-19 impact questions, like who's had a loss of income, how extensive was that loss, and try to pull all of those sources together to get that true holistic view. But just relying on any one method, either self-reported responses or what we're seeing in transactions can be misleading.
And one of the benefits that Plaid can offer to its customers is the ability to pull together to face some of that limitation by pulling together multiple data sources. I wonder if you could speak about some of the research that your customers have been doing using that wider data set.
Sure. I really just want to amplify Fiona's point earlier around the importance of privacy and security, and really just tip a large cap to JPMCI for really pioneering and opening this space up where there's just going to, I think, continue to be growing interest from all parties, and making sure that we are making the most of the data that has become available. And I think what's most promising about that is that, for folks who might be listening and might be trying to understand where do I fit in, we really, both through our own experiences and what we've seen some of Plaid's customers doing, are big believers in the ability of partnerships to help get this data into the right steward's hands in order to be able to do not just that translation, but also to make sure that the handling of that data is really strong throughout. So just as a couple of examples, we ourselves, Plaid, we're very fortunate to partner with Financial Health Network as part of their Pulse survey this year, where we built our link portal, which is what we deliver that allows consumers to permission and consent to sharing their data, in this case, specifically for research purposes. And I know that there have been a couple of presentations already, and we'll continue to hear more from FHN on just how powerful those findings were in terms of bringing together not just the various data sets that consumers have as they increasingly, as Stephanie mentioned, are using products from across various providers, but also really that intersection of their financial sort of status day to day in terms of dollars and cents and what they're thinking and feeling about their finances from a sentiment standpoint. So I think FHN is doing some really interesting and pioneering work there as well. And then just two other examples of really powerful partnerships that we've seen. Savor Life, and I know they're talking, I think, later today about some of their findings. I know partnered with Columbia University to share some of their customers' transaction level data and do some research there. And then Earnin had partnered with Opportunity Insights, which is Raj Chetty's group, which is doing real-time data visualization in the context of providing additional insights around COVID. So just wanted to flag all of those as ways that, you know, we as a data aggregator are always here to support our customers in their efforts to obtain that data in order to conduct their own research. And some really exciting ways that we're seeing those partnerships play out in the real world and hope to continue to see them flourish and grow.
You hit the nail on the head there, Ben, which is kind of our audience might be thinking, this sounds great, really inspiring. We can get these macro insights and be valuable to the world and we can connect with our customers, but how do we get started? So I wonder if you might be able to each share a piece of advice for an organization that maybe is earlier on in its financial health journey and just starting to think about how to harness some of the consumer data assets that it holds right now. Fiona, would you like to
I'm happy to start. So, I mean, I guess start with the premise that these data were not created for measurement, right? These data fall out of business operations. And so they are a byproduct of business operations. And so what that means is that, you know, when the census creates a survey and publishes those data, they publish a README file, they publish a data dictionary so that others can self-discover what exactly does this field mean. And I think the first thing we discovered was we can't assume what these data mean. And we need to partner with our lines of business to, you know, really make sure that we're interpreting these data correctly. And, you know, something as basic as like card not present. Well, yeah, okay, so does that mean I bought it on the internet, or does that mean is that a gym membership I swiped once, but then each subsequent month is a card not, you know, like you start to realize that these data could be, you could easily interpret it in ways that might not be consistent with, you know, the world out there. So that would be one thing I would just start with, be humbled by the notion that like these data weren't created for measurement, and therefore you can't sort of self-discover what they mean. You have to do that in partnership with the business.
That's great. And Stephanie, from your experience of getting started with this as a financial institution, do you have any advice to share?
Absolutely. I would just say to not wait for perfect circumstances or a perfect data set or a perfect model. It's wonderful to start small with what you have available, even if it's just a couple of input points that you combine together into an overall average. That's more than enough to get started and to start supporting those business units in their projects. Also to really advise or encourage others to sort of dig into those data sets, to pull out real life examples from them. I find that in our institution, those are some of the most impactful internal research that we share. It's like exact examples of what's happening in people's lives, rents that are rising, forcing individuals to move, car crashes, or especially the difficulty of individuals who hold multiple jobs and have the burden of maintaining an older vehicle that may break down often, and that influences their income. Sort of getting those details from that very rich transactional data could have a very large impact on promoting empathetic banking, breaking down stereotypes, and really understanding your customer base a lot better. So I just sort of encourage to, when you get that level of detail, just really dig in both the micro level and the macro level. It's very helpful.
That's great. I have an eye on our time. So Ben, do you have just a quick piece of advice for folks? Sure.
Just, recognize that if you're seeing the gaps in the overall picture of consumers' finances, that this infrastructure exists to allow your customers to pull in that data and share it with you, and they I'm sure would appreciate you having that information so that you can provide better services back to them. And then in addition, just one last sort of plug for the policy angle, we're just seeing so much interest from federal regulators around what can be done in this current context and going forward to improve our infrastructure around things like credit reporting. And I think that there's just a tremendous amount of interest out there from your findings, not just for your own customers, but for the ecosystem and our country at large.
What a great note to end on. So what I'm hearing is start humble, start scrappy, seek help, and use the resources available to you. I think that's good life lessons as well as lessons for how to use customer data. I want to thank you all so much today for sharing your insights and your lessons, and I'm sure inspiring more of us to think about how we can leverage some of the data at our fingertips to influence financial health. Coming up next in just a minute, we'll be hearing from Andy Bandyopadhyay, who is Financial Health Network's head of product. He has an exciting preview of Financial Health Network's new products that should make measuring financial health easier than ever. Thanks again to everybody for listening and participating.